interest rate risk.
All right, moving on back home, the Finance Ministry has issued an advisory for public sector banks on the back of prevailing global financial stress. The government has emphasized on a closer look at business models to identify stress points, among others. The Finance Ministry has asked PSU banks to frame detailed crisis management strategies as well. Sapna gets us more.
Well, it's a very detailed advisory worked out between the government and the public sector banks. Starting off first with the issues raised on deposits. Well, the government wants the public sector banks to have more stickiness in terms of the deposits. They should not be moving in quickly in and out. The nature of the deposits should be more granular. Maybe they should rely less on bulk and corporate deposits and focus, on other high-quality current account and savings account. That is one big message. Second, of course, in terms of the exposure to government securities, they should follow the SLR benchmark that has been set out by RBI in terms of their GSEC exposure. Also in terms of managing their asset liability mismatches better. All kinds of pledged shares should be, kind of included while calculating corporate exposures. These pledged shares should also be regularly provided for. Banks should also have a ready playbook in terms of responding to any kind of a crisis situation. And last but not the least, to increase the interest rate transmission and also to avoid pricing risks. Risk-based lending should be adopted. Discretionary lending should be avoided. And, the external benchmark linked lending rate should be adopted so that the interest rate transmission is more effective. The interesting part is that all this communication has gone to the public sector banks so far. There has been no communication from the government to the private sector banks. Maybe that is something that the government can think about.